Morning, Steve Reed with the morning grain comments. Well, overnight prices continued to trade higher. We've got now November beans at 14.76. 14.81 is previous highs, and we'll see if we can push through those levels. Corn right now at 6.65, up 10 cents. Again, trading over 6.50 is probably an important price level with the September contract at 6.70. These prices are attractive to farmers to kind of clean out some of their bin, and also attractive for putting on a few new crop sales if prices drop from here during harvest. Wheat market, Chicago's up 12 cents at 8.13 with a high of 8.17. We've got the dollar higher, crude higher, and the U.S. stock market mixed in front of the Jackson Hole meeting. The metals are lower while most of the softs are higher. I think the grain market doesn't have a lot of new news, but it's reacting to the fact that Indiana and Nebraska joined South Dakota and Ohio with the pro-farmer tour finding corn yields lower than last year, and also finding soybean pod count lower than last year. Now we enter the critical phase of this tour in which they touch base in Iowa, Illinois, and Minnesota, and they should find yields and pod counts higher than last year. So we'll see how the market wants to react to that. Still a lot of uncertainty in Ukraine, as today is their Independence Day, and whether Russia will retaliate against Ukraine firing on positions in Crimea, Russian positions in eastern Ukraine, and the assassination of Putin's aide's daughter. We also are watching pretty closely as to Western Europe weather conditions continues to be dry, and some concern that it may be dry going into their winter crop plantings. Here in the United States, some rains across the southern areas. We'll see if that slows any harvest of early crops, corn in the south. We'll also be watching if this is improving the overall conditions for soils to plant our winter wheat 2023 crop. Forecasts suggest good harvest weather for the Midwest, so I think some people will be watching the corn basis and see if all of a sudden it begins to soften as farmers get into the fields. And again, bottom line is no matter what USDA and what the pro-farmer says, yields will be finalized once farmers get into the fields and start cutting this year's crop. China, certainly their drought in the central part of the country is getting a lot of press. Some people think it's lowering demand, even more than COVID restrictions, because of the drop in production, because of the lack of water and energy. We'll also be watching anything out of Washington that might be used to stimulate the economy, while the Fed is talking about an increase in rates that actually could slow the economy. So continue to see firmer tone up against some resistance levels, and wondering if we can push through those levels in front of our harvest and a slow export demand pace versus a very strong domestic basis. Hope everybody has a good trading day.